Good morning, ladies and gentlemen, to our financial managers, Ms. Anis Afika and Ms. Fatina, to our shareholder, Ms. Khairina, and to the representative of Maybank Berhad, Ms. Shakira. And not to forget to our board of directors and staff. Thank you for taking your time to attend the meeting today. Before we start the meeting, I would like to thank our dedicated people, advanced technologies, and financial resilience. We have worked together hand in hand and managed the crisis very well in this demanding year. In 2020, we delivered a solid financial and operational performance in what was an extremely challenging year. As expected, our markets were impacted by the pandemic. For the full year of 2020, our net profit dropped by 33% on lower revenue as compared with 2019. Despite the lower volumes, we managed to deliver a strong margin in line with the previous year. So back to our agenda today, the purpose of this meeting is to present the financial statement by financial managers, to discuss the loan application for Maybank, and to talk about our next year target of Dutch Lady Milk Industry Berhad. In addition, we will also discuss the return on investment of our shareholder. So here, I would like to welcome our financial managers, Ms. Anis Afika and Ms. Fatina, to give further explanation regarding the company's financial position.
Thank you, Ms. Nur Hafiza. I am Nur Anis Afika as one of the Dutch Lady Milk Berhad Financial Manager. I will highlight key points of our financial results in 2020 compared to the previous year, and then Ms. Fatina will further explain the financial ratio. First and foremost, we record a decrease in revenue and net income compared to the last fiscal year as well as the original plans. The company revenue decreased 1.5% in 2018 by Rm 1.049 billion and increased 1.7% in 2019 by Rm 1.067 billion and increased 3.2% in 2020 by Rm 1.1 billion. On the net income side, it was increased by Rm 129.5 million in 2018 and decreased to Rm 103 million in 2019 and Rm 73.4 million in 2020. Gross profit totaled Rm 416.3 million in 2018, decreased to Rm 404.7 million in 2019 and 357.1 million in 2020. Also, the operating income totaled Rm 173.87 million in 2018, decreased by Rm 140.8 million in 2019 and Rm 100 in 2020. Besides, the company total assets increased 3.2% in 2018 by Rm 404.8 million, increased 9.6% by Rm 443.6 million in 2019 and increased 12.5% by Rm 498.8 million in 2020, which specifically compared to 2020 and 2019, our current assets were Rm 314.5 million in 2019 and Rm 288.4 million in 2020. Next, the total of liabilities also increased by Rm 299.4 million in 2018 to Rm 299.2 million in 2019 and Rm 332.3 million in 2020, which is record Rm 292 million current liability in 2019 and Rm 324.2 million total current liability in 2020. Lastly, the total of equity increased by Rm 105.5 million in 2018 to Rm 144.4 million in 2019 and RM 166.6 million in 2020. That's the summary for our business results in 2020 by comparing the financial in 2019 and 2018. Next, I will pass to Ms. Fartina to explain the ratio of our financial results.
Thank you, Ms. Anis Afika. Assalamualaikum and a very good morning. My name is Nur Fatina Balkis binti Pauzi, one of Dutch Lady Milk Industries Berhad's financial managers. Now, I'd like to briefly go through our company's financial ratios analysis for the years 2018 and 2020. Okay, let's have a look at the liquidity ratio first. The current ratio of Dutch Lady Milk Industries Berhad in 2019 is equal to 1.1 times higher than the year 2020, which recorded 0.9 times. Next, the quick ratio in 2019 is equal to 0.6 times higher than 2020, which is just 0.4 times. Finally, the net working capital in the year 2019 is equal to 22,417 ringgit compared to the year 2020, which recorded negative 35,746 ringgit. We can see here that the company's performance in 2019 is better than in 2020. In this stage, the company is unable to generate enough operations to pay for its current obligations with its current assets. Okay, moving on to the second financial ratio is the efficiency ratio. Our company asset turnover in 2019 is equal to 2.5 times, while in 2020 is 2.3 times. It shows that 2020's low rate indicates that the asset is not used effectively to generate revenue. Next, the account receivable turnover in 2018 is 10.2 times lower than 2020, which is equal to 12.3 times. Looking to the ratio in the year of 2020, the company is not very well in controlling the trade debtors. For the average collection period, the 2020 ratios show that the company can convert its receivable as fast as it should, as the time taken is 29.67 days, shorter than 35.78 days in 2018. Then we move on to the inventory turnover. It seems that 2020 is doing better than in 2018, which 5.2 times more than 5.0 times. From here, we can see that the company may obtain an increase in its sales. For the last one is fixed asset turnover. In 2018, its value was stated 8.5 times higher than the year 2020, which equal to 6.5 times. This means that the year of 2020 operation is unable to utilize its fixed assets efficiently. Okay, we will be moving to the third financial ratio, which is the leverage ratio. For the debt ratio, we can see that 2019 is doing better than 2020, where the value is 39.9% rather than 46.5%. The high ratio in 2020 implies that company has more financial risk. Next, for the value in equity ratio, 139.2% has been recorded in 2020, shows a high value compared to 2019, which 122.5%. This higher debt to equity ratio in 2020 indicates that the company has a higher risk of closure or bankruptcy. Lastly, the time interest earned in 2019 is more significant than 2020 by 38.4 times compared to 32.3 times in 2020. It shows that in this current situation, the company is unable to meet its interest obligations because the annual interest obligation is greater than the earnings. Okay, last but not least, I will explain the profitability ratios. For the return on equity ratio, it indicates that 2020 is less capable of generating cash internally, where the value is 47.2%, which is less than in 2019. Next, the return on assets ratio shows that 2020 has a 15.6%, less than in 2019, which is equal to 24.3%. This can be interpreted as the business in 2020 being less profitable. Moreover, for the gross profit margin, the value is 37.9% in 2019, higher than in 2020. This higher ratio indicates a high contribution margin. Let's move on to the operating profit margins. Here it seems that in the year 2020 is less well equipped to pay for fixed costs and interest and obligations, where the value is 9.3%, less than in 2018. The last profitability ratio is the net profit margin. The value is in 2020 is 8.9%, while in 2019 is 12.9%. This indicates that company has a small amount of profit from its sale revenue. So I think that's all for me regarding the financial analysis ratios. Thank you.
Okay, thank you, Ms. Fartina. According to the data, I will further explain the ratio compared to the industry average ratio, IAR. As we can see, this graph compares the ratio in Dutch Lady Milk Industry Berhad in 2020 versus the IR. First of all, for the liquidity ratio, we can see here that the current ratio of our company is 0.9 times lower than the industry average ratio, 1.6 times, and its quick ratio is 0.4 times lower than the IR, which is 1.12 times, which means the company's performance in 2020 has dropped and worse than IR, and it shows that the company is not able to meet its short-term obligations. Okay, the next one is activity management ratio. The average collection period of Dutch Lady Milk Industry Berhad is 27 days, which is lower than the IAR 28 days, while its asset turnover is 2.3 times higher than the IR, which is 0.82 times. Overall, this indicates that our company is moderate than the IR, and it shows that the company is moderately in managing their assets effectively to generate sales. Besides that, the leverage ratio for this company is the debt to equity ratio of Dutch Lady Milk Berhad is equal to 10.03%, which is higher than the IR at 0.1%, while the company's time interest earned is equal to 149.9 times, which is lower than the IR, 49.8 times. Overall, we can conclude that the company is moderate than the IR, and it shows that the company is moderately in manage their debt to generate profit. Last but not least is profitability ratio, which is the operating margin of Dutch Lady Milk Berhad is 9.3%, lower than the IR 13.08%, while its net profit margin is 6.67%, which is lower than the IR 14.44%. Overall, we can conclude that Dutch Lady Milk Berhad is worse than the IR, and it is shown that the company is not able to generate higher profits. This concludes our presentation on the fiscal year 2020 financial results. Thank you.
Thank you to Ms. Anis Afika and Ms. Fartina for the detailed explanation of the financial statement, in which I can conclude that our financial position in 2019 is better as compared to 2020 due to the pandemic circumstances. So, Ms. Shakira, I would like to hear your opinion based on the ratio presented just now. This is because I am planning to apply for a loan to invest a new project in Shah Alam. Therefore, we will continue the meeting by listening to the perspective of the representative of Maybank and also our respected shareholder, Ms. Khairina.
Assalamualaikum and a very good morning to all. I am Nur Shakira binti Zulkifli from Maybank Berhad, would like to say thank you and feel honored to Dutch Lady top management, especially Dato' Hafizah as the CEO of Dutch Lady and the financial managers, Ms. Fartina and Ms. Anis Afika, for inviting me on behalf of Maybank Berhad and choosing us as your company choice. Firstly, thank you to both of the financial managers for the clear explanation about the Dutch Lady's financial statement for the previous years, which is 2019 and 2020. As we all know that, before the bank approves a loan made by a business, the bank will first look in detail at the financial performance of the company and identify whether the company is able to repay the loan or not. Regarding to Dutch Lady's financial situation, I would not suggest your company make a bank loan because referring to this company's leverage ratio in 2019, the debt ratio is 39.9%, while in 2020, the debt ratio is 46.5%. It is showing an increasing debt in following years. From a poor risk perspective, debt ratios of 0.4 or lower are considered better, while a debt ratio of 0.6 or higher makes it more difficult to borrow money because of the high possibility of the company being unable to repay the money and its interest. Besides, I also saw the debt to equity ratio in 2019 was recorded 122.5%, increasing to 139.2% in 2020. A higher debt to equity ratio indicates that a company has higher debt, while a lower debt to equity ratio signals fewer debts. Generally, a good debt to equity ratio is less than 1.0, while a risky debt to equity ratio is greater than 2.0. This means that this company has been aggressive in financing its growth with debt. So this is my second reason why Dash Lady are not suggested to make bank loan with us for now. Other than that, the time, interest, and ratio measures the ability of an organization to pay its debt obligations. As recorded, the time interest earned for Dash Lady is lower from 2019 to 2020, which is 38.4 times to 32.3 times. A ratio of less than 1 indicates that a business may not be in position to pay its interest obligation and so is more likely to default on its debt. A low ratio is also a strong indicator of impending bankruptcy. From my point of view, it is quite risky and I am concerned regarding the loan application of this company. Therefore, I can conclude here, this Dash Lady company is not suggesting to make a bank loan because of the inability to pay the loan. Instead of making loan which can lead high debt, I would like to advise to Dash Lady focus on making profit and revenue. That's all from me as my bank representative. What do you think, Ms. Karina, as the biggest shareholder of Dash Lady?
Thank you, Ms. Shakira, for the question. First and foremost, I would like to express the deepest gratitude to the CEO, Ms. Hafizah, and also not to forget Dash Lady for inviting me, Nur Karina Iman from Freestone Campinan LMI Malaysia Holding, as one of the shareholders of Dash Lady to the meeting today. Next, I also would like to thank all in the meeting today, especially for both financial managers, Ms. Anisafika and Ms. Fatina, regarding the detailed explanation regarding of Dash Lady financial position. However, as a shareholder, I could not help but to feel concerned for the return of my investment with Dash Lady. Moreover, I also the biggest shareholder in Dash Lady, which is with 50.69% of shares. This is because when I look at the profit ratios of the company and compare it to the past years, I was quite disappointed since it has decreased. For instance, as has been presented before, the return of equity in 2020 is 47.2%, meanwhile in 2019 is 82.4%. So I can see there quite a huge drop here. Then based on net profit margin, the profit also has decreased from 12.9% in 2019 to 8.9% in 2020. However, I can understand this matter because this is a predictable issue and not only us but all industries are facing with COVID-19. So this is expected. Therefore, as a shareholder, I really hope Dash Lady will do action in order to maximize the return, so I will be more confident to continue investing in Dash Lady in the future and the current. Then, I am also concerned regarding the dividend per share in Dash Lady Berhad. This is because when I look toward the growth is kind of low compared to the past years. Therefore, I would like to know whether Dash Lady is able to pay a higher dividend for us in the future shareholder or not with this profitability performance.
Sorry for interrupting. Regarding the dividend, Ms. Karina don't have to worry since we have forecast our revenues for the next year, which will increase 3% to RM 833.3 million, and the net income will increase 21% to 64.5 million. The revenues reflect an increase in demand for the company's products and services due to favorable market conditions. Also, the net income benefited from administrative expenses, which were forecast to decrease by 7% to RM 21.8 million.
Okay, I understand. Thank you, Ms. Fatina, for the explanation. Then, how about the idea of Ms. Hafizah to invest in a new project in Shah Alam? From my point of view, I think based on the profit and loss, the company can afford new investment right now since mostly all of the parts under profit ratios are less stimulating.
You have made your view very clear, Ms. Fatina. I agree with you. Even if the profitability decreased, the net operating profit after tax by 76.806 million in 2020, that makes the return on invested capital 43%, will not give a low dividend to our shareholder. So to Ms. Khairina, we are very pleased with what we have been able to accomplish for you, our shareholder, over the last 2+ decades. However, regarding the project, I think it will give high income to our company, since we need to have more income to cover our loss during this pandemic. I believe that our company can improve the net income and can afford the new investment, since we can operate our factory like usual. Is there any objection?
Sorry, Ms. Hafiza. According to the trend in Dutch leather industry Berhad ratio over the last 5 years, the year 2020 shows that the company was not able to cover their debts, as it was less than 1, which is 0.9 times. It may also reflect our organization ability to borrow against good prospect to meet current obligations. Hence, we can't take the risk since we don't know how the pandemic will affect our business in future. I suggest that we need to stabilize our finance first, then we will plan regarding the new project soon.
I think that makes sense. I support your idea to increase the sales before we invest in a new project. We will look forward to this matter. So I guess that will be all for today. Thank you to our financial managers, to our dearest shareholder, to the respected representative of Maybank, and to everyone who attended the meeting today. To conclude, let us look at some key priorities for our next year target. Starting with our operational performance, I clearly expect us to show steady improvements in financial performance towards our 2023 targets. We expect to grow in line with our end markets recovery and will continue to execute on efficiency measures. As our ambition is to grow Dutch lady milk industry Berhad, we will have a strong focus on strengthening our businesses also by making add-on acquisition. Finally, looking at capital allocation, we will expect a meaningful uplift in cash generation, and our capital allocation priorities remain unchanged. We will also continue to focus on our sales, investment, including R&D, to drive growth, pay our shareholder a rising sustainable dividend per share, execute value-creating acquisition, and return additional cash back to our shareholder. For me, Dutch Lady is a leading milk company now and in the future. So, on behalf of everyone at Dutch Lady Milk Industry Berhad, I would like to thank you for your trust. I am pleased and proud to be the Chief Executive Officer of such a great company with a bright future. Thank you and Assalamualaikum.
Suku saya.
Itulah, kena mesra alam.
Nani tidak sini.
Ini
Nani tidak sini. Yeay.
pandainya anak siapa ni?